Hello guys, welcome to another video. Today we are going to talk about accounting subsequent to initial acquisition. Like this is actually the second video related to the intangible assets. In the first video, we talked about the definition of intangible assets and initial recognition and measurement. We also talked about, of course, like which cost we need to capitalize initially and which cost should not be capitalized. So here we go. Today we are going to talk about like subsequent measurement, like at balance sheet date, what we need to do. Of course, at balance sheet date, we record our intangible asset at cost minus accumulated amortization minus any impairment losses. This is how you will get the carrying value of the asset for intangible assets. So here we are going to talk about especially about the amortization and accumulated amortization, like how you can amortize our intangible assets. Okay, so here we go, guys. So because you should remember here, those intangible assets having the finite life, so those assets should only be amortized, and those intangible assets having infinite life should not be amortized at all. Okay, so just we will test those assets for impairment only. So here we go, guys. Please remember an intangible assets with a finite useful life. This is also called amortized intangible asset to the reporting entity must be amortized over its useful life. Actually, useful life is the life over which you are expecting to obtain the benefit from the use of the asset, that is called useful life. It could be 5 years, 10 years, or 8 years. So guys, here we have a formula to calculate the amortization expense. Please note here, guys, this formula, whatever I'm going to explain now, it could be used for all intangible assets other than patent, of course. Okay, because for patent we have a different formula. And of course, you will never amortize the goodwill also, which we will cover in the separate video. But the point is, this formula you can use to amortize the intangible assets other than patent. And what is the formula? The formula is you have to take initial cost of the asset, okay, which you have capitalized initially, minus a residual value, which you will get maybe through the sale of the intangible asset at the end of useful life. So here we have a really important note. So for the residual value, don't you worry, I will explain. And you will simply divide with the useful life of the asset. So when you take the cost of the asset and residual value, so this is called amortizable cost. Amortizable cost means that this cost need to be amortized over its useful life. But when you want to amortize the patent, so you have to memorize this formula. So if you want to calculate the amortization expense for patent, so you will take initial cost of the asset which you have initially capitalized minus a residual value, if any. Again, we have a note here that I will explain. Divided by shorter of useful life and legal life. Okay. So for example, if your asset might have useful life of 10 years, but it might have only legal lives because you got a patent for only for 6 years. So you should amortize over 6 years. Sometimes, guys, your useful life might also be less than legal life because due to change in consumer taste or maybe due to availability of the substitutes in the market, it could be any reason. Okay. So here we go, guys. If you know the amortization expense, for example, I know amortization expense for the period is $10,000. So what entry you will pass? You will debit the amortization expense, which you will take it to the income statement, and you will credit the accumulated amortization or intangible assets. Both you can credit. If you want to maintain a separate account for the accumulated amortization, you can do it, or directly you can also credit the intangible assets. Okay, so both practices are allowed. So here we go. Now let me tell you first for the residual value. So in for your exam, for the residual value, I'm going to explain. For your exam, guys, if residual value is provided in the exam question, simply you need to subtract from the initial cost of the asset. Okay, and then you will amortize. You will divide with that useful life. But practically, so this residual value we assume always zero until. So these two conditions are there. So those two conditions I'm going to explain first. For example, here until, as I told you, residual value, first you need to understand what is residual value, the value which you can drive after the useful life of the asset, okay, which you can drive through the sale of asset. So this is how it is normally calculated. You need estimated fair value which you can drive through the sale, minus maybe some disposal cost. Maybe you will incur certain cost to sell this asset. So this difference is called a residual value. In your amortization formula, where you took cost of asset minus residual value. As I told you in exam, if residual value is given, just you will subtract. But practically, this residual value we assume zero unless what? Condition number one, a third party has committed to purchase the asset. Okay, if someone has given you commitment that he will buy your asset, whatever he has agreed with you, so you can deduct as a residual value practically. Okay. Or second, there is a word or it can be determined, like residual value can be determined from an exchange transaction. Maybe you are going to exchange two assets, okay, and you can determine the residual value in an existing market for the asset that is expected to exist at the end of useful life. Like maybe you can determine through the exchange transaction from the market which is expected to exist, okay, at the end of useful life. Okay. So, but in your exam, if residual value is given, just quote, okay, just take it. You have to take it. So this is how you will deal with the amortization. Now let's have a look here. As I told you, the carrying amount, I'm just going to explain. So in your balance sheet, how you record your asset, you need historical cost, less accumulated amortization, less any recognized impairment losses, impairment loss. Don't you worry, I will cover in the next video. So this is how you will get the carrying value of asset. So that exam questions are not easy. You need a practice also. So here we go. We have few more points, and then we will practice few exam standard questions. So here we have examples. For example, just to understand, an intangible assets was purchased on the first day of the fiscal year, first day, and for $1 million. So this is the cost. Its useful life is 5 years and it has residual value 100,000 as it is given residual value. Simply you will subtract. Okay. However, its pattern of consumption of economic benefit is not reliably determinable. Of course, we are going to use trade line method then. Okay. The year end amortization entry. First, you need to calculate the amortization. How you will calculate the amortization? You have cost of asset, which is 1 million, minus residual value, which is 100,000. It means amortizable amount is $900,000. Simply you will divide over the 5 years. So you will get annual amortization expense on straight line basis 180,000. And now what entry you will pass with this 180,000? You will double the amortization expense, which you will take it to the income statement, and you will credit the accumulated amortization or intangible asset with 180,000. Now, if you want to calculate the carrying value in your balance sheet, so this is how you will calculate. You need a cost of asset, which is 1 million minus accumulated amortization because it's only the first year. So your accumulated amortization is $180,000. So you will subtract. So $820,000 will be the carrying value at the end of first year. Okay. Please also note there is another exam note. If any amortized intangible asset, which is having a finite life, of course, is later determined to have indefinite life. Maybe later on you have determined that no, it's not having a finite life, it is having an indefinite life. In this scenario, of course, it must no longer be amortized. You have to immediately stop the amortization. It should be tested only for impairment, and impairment again, how you will calculate, I will cover in the next video. So here we have really important point also. This is the most, I mean to say, important and examinable point. And this point is for patent only. Okay. For example, guys, maybe your pharmaceutical company, maybe you have invented a medicine formula, maybe you got a patent for, let's assume, I'm assuming for, let's assume 15 years from the government. and now another pharmaceutical company is going to copy your formula. I mean to say there is the patent infringement. Okay, so what you are going to do now, you are going to maybe file a case against the other company who is involved in the patent infringement. Okay, so there you will pay certain legal cost, of course. Okay, like you are going to defend your patent. So now here, what to do with those patent costs which you are going to incur to defend your patent? Accounting for legal defense of patent depends upon outcome of the litigation. Actually, it depends upon what outcome of litigation. If the cost of successful litigation, like you are successful in defending your patent infringement, so whatever the cost you have incurred, like maybe attorney fee or certain other legal cost, these costs must be capitalized. So of course, if these costs are capitalized, so you need to amortize again because it is patent. So you need to amortize over shorter of useful life or legal life, because these costs are going to provide you benefit in the future period. Okay. And if the cost which you have incurred to defend your patent, if the cost and your litigation is unsuccessful, like you are unsuccessful in defending your patent, in that scenario, as per US GAAP, what you need to do, you need to record those costs as expense immediately. You are not required to, you are not bound to capitalize those costs. Okay. Please remember here, it is also another note, this note, like for example, if you are unsuccessful in defending your patent, so it means whatever in your balance sheet, you have a cost of patent minus accumulated amortization. For example, this is your carrying value. So if you are unsuccessful, of course, what we need to do, so the cost of patent has no value and should be recognized as loss immediately, which you will take it to the income statement, like because now this patent is no longer you exist, of course, because you are not successful in defending your patent. So simply you will debit the loss and credit the patent with the carrying value. I hope it is clear, guys. So this is what is the accounting for patent. Now let's see whatever we have learned, how to apply in the exam questions. Okay. Please also note here, one more note is there. Intangible assets with finite life. Of course, it should also be tested for impairment. And impairment again we will cover in another video. I will say in the next video. So here we have a first example just to understand, and then we will see exam standard questions. So here we go, guys. A company has two patents, patent A1 and patent B2, both with the estimated useful life of 10 years. Please remember, guys, it's a patent and it should be amortized over shorter of useful life or legal life. Both patents have allegedly been infringed by competitors. Okay. On January 1, 1, the company incurred legal costs in attempt to stop the infringement of $20,000 and $25,000 for A1 and B2 respectively. It means you have incurred 20,000 for A1, 25,000 for B2. The rights of patent 1, A1, were defended successfully. So if it is defended successfully, of course, the cost of $20,000 should be capitalized. So what entry you will pass, okay, in the year of defend, where you have like in the same year where you have incurred the cost, you will debit the patent as capitalized legal cost. I would say you are debiting the asset and you are going to credit the cash by 20,000. And please note, so this should also be amortized. Okay, you need to amortize. Let's assume it's in year one, everything is happened. So how you will amortize now? So simply you will take the amount which was $20,000, which has capitalized because initial cost is not given. So I'm assuming, let's assume this is the only amount because it's in the question only. So divided by 10, so you will get amortization expense, and what entry you will pass for the year, debit amortization expense and credit patent or accumulated amortization. It's up to you. So but there is another point, please remember here, and it is, by the way, it was defended for additional 12 years. So why we divided here 10? Because useful life was 10 years. and remaining legal life is 12 years. So we have to divide, we have to amortize over the shorter period. So that's why it's divided here with the 10. The rights to the patent B2 were unsuccessfully defended. It means this cost we need to record expense immediately. So what entry you will pass? You will debit the legal expense and credit the cash for $25,000. Let's move to the questions, guys. Here, please, before the question is the one small point. Of course, as I told you, if your intangible asset is having a indefinite useful life, it should never be amortized. Only we will test for impairment. Okay, here we go, guys. For that, if you want to calculate the carrying amount for intangible asset with indefinite useful life, so simply it will be equal to historical cost less impairment losses, because it will not be amortized. So here we have a question number 1. This is exam standard question. This is how the question will be tested in the exam. So here, Gray Company was granted a patent on January to year 5. Actually, at the start of year 5, so you have a patent, and it's a patent, okay, and appropriately capitalized $45,000. So this is the initial cost of related cost. Gray was amortizing the patent over its estimated useful life, which is 15 years. Okay, useful life is 15 years. During year 8, I mean, say in the 4th year, because you have acquired and capitalized this patent in year 5. So at the start of year 5, so you will take full year 5, 6, 7, and now we are sitting in the 4th year, which is year 8. Gray paid $15,000 in legal cost in successful defending the attempt infringement of the patent. So it means that it's a capitalized cost, because you are successful in defending your patent infringement. After the legal action was completed, Gray sold the patent to the plaintiff for $75,000. Gray policy is to take no amortization in the year of disposal. Actually, because in year 8, you are going to sell your patent, and it is your policy. You are not going to amortize your intangible asset in the year of disposal. Of course, you don't need to calculate amortization expense for year 8, because it's a year of disposal. Now, what is the requirement? Let's have a look. In its year 8 income statement, what amount should Gray report as a gain from sale of patent? They're asking about gain. They are not asking about amortization. Okay. So here we go, guys. How you will calculate the gain? Simply, to calculate the gain, you have to take sale price of the asset in year 8. You are sitting in year 8. Okay. And in the sale price is $75,000, because it's given in the question. You can just look at here. It's given here. Okay. It's given here. Then you have to subtract here from the sale price. You have to subtract the carrying value of asset. Okay, for the carrying value of asset, how you will calculate? Of course, you need a cost of asset, and you have to subtract accumulated amortization. Okay, so first of all, initially, like in year 5, you capitalize the asset with the cost of $45,000, and there is no legal life is available. So simply you have, it means you are accumulating. I'm talking about first initial cost. Huh? So it means you are accumulating over useful life, and useful life is given as 15 years. You can see here 15 years. So it means if you want to calculate amortization, so how you will take, you need a cost of asset, which is 45,000, minus residual value, which is 0. It's not available in the question, divided by 15 years is useful life. It means you will get amortization expense for 1 year, which is going to be 3,000 per annum. And you sold it in year 8. It means you are going to amortize for 3 years, for year 5, 6, and 7. Why 5? Because you acquired at the start of year 5. So it means you will just multiply with the 3 years. Okay. So you will get accumulated amortization of 9,000 for initial cost. It means, so if you will subtract, I guess you will get 36,000 carrying value for the initial cost. But there is another point. What is the point? In year 8, you also incurred legal cost to defend your patent, and you are successful in that. It means the legal cost you will also add in this carrying value, which is 15,000. $100,000. So because you should capitalize. So it means so your total carrying value is 36 plus 15. It's going to be $51,000. This is your total carrying value. And your sale proceed is 75,000. If your sale proceed is greater than carrying value, this is called gain. I guess it will be 24,000. This is your gain. So which should be reported in year 8 income statement. So it means option D is correct. Okay. Now we are going to practice another question. Now we have another question. Question number 2. For example, they're telling you a corporation purchased a patent at the beginning of year 1. It's beginning of year 1 for $22,100. That was to be amortized over 17 years. You have to amortize over 17 years on July 1, year 8. Please remember, guys, here you are sitting in year 1. Okay. And now you are sitting in year 8. And when on the July 1st, year 8, the corporation incurred legal cost of 11,400 to successfully defend the patent. The amount of amortization expense that the corporation should record for year 8 is. So, guys, it's question is not simple as you can see. Maybe you are thinking it's very simple, but when you will solve it, so you will see the complexity here. Here we go, guys. So first of all, because you have now two capitalized costs. First capitalized cost is in year 1, which is 22,100, and useful life is 17 years. So first of all, you need to calculate the amortization expense for initial cost. Okay, expense for initial cost. This is for initial cost. Initial cost is how much? 22,100. Residual value is not given, so it will be 0. Divided by shorter of useful life or legal life. Legal life is also not given. So simply we will divide with the useful life, which is 17 years. So let's do how much that amortization you will get for 1 year. 22,100 divided by 17. So you are going to get 1,300 amortization per annum. Okay. Now here on July 1, year 8, the corporation incurred legal cost of 11,400. So now, guys, you are sitting in year 8. Okay. And I'm going to deal with the legal cost. Okay. Legal cost is how much? 11,400 divided by, because you are sitting on this date now, July 1, year 8. From, I mean to say, July 1, year 8. Okay. July 1, year 8. You are sitting at this date. From here till the 17 years, because there is no change in useful life. So you have remaining life of 9.5 years. Okay. Because this is the date when you are going to capitalize your legal cost. You are going to capitalize, you are going to debit the patent. Okay. And you are going to credit the cash. Okay. By 11,400. So it means from this date till the end of the period, we have 9.5 remaining years. So what we will do, simply I will divide here with 9.5 years which are remaining from this date. Okay, I will get annual depreciation. If you will just divide 11,400 divided by 9.5 years, you are going to get 1,200 amortization per annum. But here I need only amortization for 6 months, because we capitalize when we capitalize at July 1, year 1. Okay. So it means we need only 6 months, like from July till December, these are 6 months. So 6 over 12. It means for 6 months, your amortization expense is going to be 600. Now look at the question. What is the question? Question is what the amount of amortization expense that the corporation should record for year 8. So first of all, you will take this value, okay, which was the amortization expense for initial cost, because every year you will get 1,300, 1,300, plus you will take this 600 because you have also incurred 11,400 cost to defend your patent. Okay. And for that, your amortization for 6 months will be 600. If you will add these two values, so this is going to be your amortization expense for year 8, which is 1,900. If you will look at here, which option is correct? Option B is correct. Okay, guys. So I hope, guys, it is clear. See you in the next video. In the next video, I'm going to talk about impairment of intangible assets, and we will perform couple of questions also. Thank you so much, guys. Bye bye.